Before we look at the assessed tax loss, I just quickly want to revise two principles of IAS 12. Number one, the standard indicates to us if we have recognized a deferred tax asset in the prior year, the following year we need to revise if that deferred tax asset is still applicable. If not, guys, we need to take it out. Okay. Then the second principle, if we had a loss in the prior year, but we did not use the loss, we did not recognize the deferred tax asset, the standard indicates to us that in the following year, if we are able to identify that there will be future economic benefits to be able to use that loss, we may now recognize that loss and use the loss. Okay. Now, if you look at the information provided, they've indicated to us that there is an accounting profit of 6.9 million. Therefore, we are able to identify that there is future economic benefits in this year. Therefore, we may now use that loss in this year. Okay, now when we look at the information, there's an assessed tax loss on 31 December 2020. Impact suffered operating losses during the previous financial year and had an assessed tax loss of 1,080,000 on 31 December 2019. The company correctly utilized 412,800 of the assessed tax loss by recognizing a deferred tax asset of 115,584 relating to the assessed loss of 2019. Okay, so if you times the 412,800 by 28%, you will see that this will equal to the 115. Now, what does this actually mean? If we include the information in our deferred tax, we will have an assessed tax loss line item in our deferred tax. We have a loss of 1,080,000, of which we were able to only recognize, guys, and this is important, we were only able to recognize a deferred tax asset of 115,584. Therefore, guys, the temporary difference 412,800, which they've provided to us, we were only able to utilize 412,800 to recognize a deferred tax asset. Sorry, guys. Okay. But what does this mean for this year in terms of our current tax? Remember, if you think about deferred tax, it's a temporary difference, a timing difference. But this year, we may now use that total amount against our profit. Therefore, at the bottom, we have our unused loss of our prior year. And we may now use the loss, 1,080,000. Okay, you're going to tell me, but Bianca, we only have the balance left of the 1 million minus the 412,800. I'm going to explain to you just now. Okay, so we may now use this amount here. Okay. Now, do you agree with me? When we look at our deferred tax calculation is now complete. And we need to determine the amount that we need to include in terms of our movement in our temporary difference. Remember, this is from our deferred tax calculation, and this will be our calculation number 2. Now, let's complete our totals. Right, now I want you to listen, please. We need to identify the movement. When you look at the left side, I'm going to include here. We need to identify the movement of our temporary difference from 2019 to 2020 and our deferred tax. Okay, now that movement can consist out of the profit and loss portion, can consist out of OCI if there's revaluations, it can consist out of our losses, and it can consist out of a change in tax rates. Okay, now when we look at this, if we need to calculate our current tax, our current tax is based on our profit and loss. Therefore, we need the profit and loss movement in terms of our temporary difference. Therefore, when we look at the totals, I want you to please identify the total temporary difference for 2019 is 412,800. Now look at this, guys. It is exactly the amount that they have recognized a deferred tax asset for. Therefore, the net deferred tax for 2019 was 0. Okay. But we now need to identify the movement in terms of our profit and loss. If we look at the land line item, this is 0, therefore not applicable. If we look at our property, plant and equipment, yes, profit and loss. If we look at liability, yes, profit and loss. Therefore, we need to look at the 412,800, and this now increase to an amount of 4801600. Do you see? The 412 increase to 801600. Therefore, 801600 minus the 412,800, and we have an amount of 388,800. And this is a taxable temporary difference. Now the same, when we look at our deferred tax column, there is an increase. A deferred tax liability amount of 115,584 will increase to the deferred tax of 224,448. And this is an amount of 108,864. Okay guys, there is an increase. Now let's just indicate our calculation here. 224,448 minus the 115,584. Okay, and when we look at our OCI, nothing. When we look at our loss, we are able to identify, guys, that there is a movement in our loss of 412,800, and the amount is 115,584. Include our bracket. Why? Because it moved from a deferred tax asset to 0. Okay. Now, when you look at this and you add the movement of our temporary differences, this will be the 801600, exactly the same as what we have calculated, guys. And when you add our total of our movement, this will be 224,448, and this is exactly what we have calculated the deferred tax balance liability to be. Now, we need to include in our current tax the movement of our temporary difference that relates to our profit and loss. Okay, when we look at this, guys, this will be the 388,800. Let's transfer this. 388,800, and we need to include a bracket. Our brackets, right, guys, because it's a taxable temporary difference. Okay, so we are now able to calculate our profit for tax purposes, and this will be an amount of 5,209,800. Times this by 28%, guys, and this will be 145,874. Now let's transfer this to our current tax line item in our income tax expense note. Our 145,874. Right, guys? Yes. You look at the bottom, 145,874, and we have transferred this. Right. Therefore, our current tax calculation is now complete, and we now need to complete our income tax expense note. Okay, so our next line item will be the movement in temporary differences in calculation 2. Okay, guys, so look at this. Movement in temporary differences in calculation number 2, and this will be the 108,864. Okay, now just think about your journals here, guys. Okay, we will have to debit our deferred tax in our profit and loss, our income tax expense, and we need to credit our deferred tax liability. Now, if we debit our expense will increase. You with me? Now, this is a note. Our expense will increase with a 108,864. You see this, guys? Now, in terms of temporary differences, I just want to note one thing to you here. If you look at our current tax calculation, do you see our taxable amount, taxable temporary difference? We have deducted the 388,800. Now this is the 100% of our temporary difference. And then at the bottom, we include only 28% of this amount in our current tax. And this 1458744 is included, guys, minus the 388, sorry, I just quickly want to check, 800 times 28%, which is the 108. Therefore, the net effect minus and a plus is 0. You see this, guys? That line item in terms of our deferred tax will only be included as a total. Here, the 224,448 in our statement of financial position. Okay, now we're still busy with our deferred tax. The next line item is recognition of our unused tax loss not previously recognized. We did not previously recognize that amount. Okay, so if we look at this, remember it was a total of 1080000. Then we have used the we recognize 412,800 as a deferred tax asset. Okay, therefore the balancing figure we now need to recognize, previously not recognized, and this will be an amount of 186,816. Let's just quickly discuss the sign. You identify this as a negative, and it feels weird. Recognition of unused tax loss not previously recognized. So now we technically recognize it. Okay, so when you look at the journal, we will have to debit the deferred tax asset because we recognize this. And then we credit our deferred tax in our profit and loss. Our income tax expense is an expense, increase on the debit side, decrease on the credit side. Therefore, we need to include our brackets. Next line item. Unused tax loss utilized, which we now use in 2020. If you refer to our current tax, this will be the 1080000. Therefore, we now use that amount. And this will be the 1080000 times 28%. And this is 302,400. Now, guys, again, when you look at this, included in our current tax, we took it out. You see, it's a negative. Let me make use of pink here, guys. Okay, so we took this out because we use this, right? And then at the bottom, we have our 1.4 million, which is 28% of our tax profit. And when you now look at our note, we then include 28%. Therefore, again, guys, our net effect at the end of the day will sort of be 0 when you look at this. Okay, next we have included our foreign tax, right? And we are now able to calculate a total. And this is 1689192. And then our tax rate reconciliation. Remember, this should reconcile to our income tax expense amount, the 1.6 million. Therefore, 1689192. Now, how do we get from the 1.9 million to the 1.6 million? What is included at the top and not at the bottom? Let's think about this one. Okay. Now, first, always your easy one, guys. You will be guided by your non-deductible, non-taxable items. Therefore, we know that we have our dividends. We have our accounting profit on the land. This is our easy ones. Okay, now let's transfer this to our recon. Remember, you need to now times the amounts by 28%, and this is our dividends received. 89400 times 28. And this is an amount of 25032. Okay, so again, guys, think about this. The dividends is included in our accounting profit, but for tax, we now need to take it out. Therefore, we take it out, right? The next one we've identified is our accounting profit on our land. Okay, guys. Now, this will be when you refer to our calculation. We have calculated this. It's the 84,000. But just for completeness, I'm going to include this as the 420,000 times 20%, which is the 84,000 times 28%. We now need to take this out. Same principle as the dividends, guys. 3520, right? Because the 100% was included, but we can only tax 80%. Therefore, we need to take out 20%. Now, what's next? If you look at our total income tax expense, which is an amount of 1.6 million. Included is our foreign tax. But in our accounting profit calculation, we've included the foreign income at the 28% because our foreign income is still included in the 6.9. Therefore, this is included at 28%, but we only include 6,000. Therefore, there is a difference in the tax rate of our foreign income. When you look at the left side, not right, left side, guys, our total foreign income is the 48,000 times 28%, and this will be an amount of 13,440, right? But they have already paid 6,000. Therefore, there's a difference of 744. Okay, so that 1344 is included in the 1.9 million. But the 6,000 is included at the top. Therefore, we need to take out the 744 from the 7.9 million. 7440. Right. Next, what is included in our 1.6 million, which is not included? Okay, guys, in the 1.6 million, our total income tax expense, and not included in the 1.9 million. Okay, so I'm going to explain this to you by means of purple. Look at the top left, this purple color, guys. I've tried to clean my screen a little bit. I'm going to work through all of our lines from the top. Okay, so if we look at our current year's tax, 1.4 million, right? We have identified at the bottom all of our tax effects of non-deductible and non-taxable items. Then, in terms of our movement of our temporary difference, we have identified that technically speaking, guys, the net effect is 0. In terms of our recognition of unused tax loss not previously recognized, guys, is this included in the 1.9 million? Oh, no. Therefore, this is our line item. But please don't stop the recording now. I want to explain to you further. Unused tax loss, not previously recognized. Okay, guys, you can write this out. And if we include this 186,816, our calculation will recon. Okay, but if you look at the next line item, the unused tax loss utilized, the 302,400. Guys, remember I've indicated to you that this is included in your current tax. Therefore, we take it out here and we have included it here. Therefore, again, net effect 0. Our foreign tax, the 6,000, we have discussed this in terms of our reconciling item. Okay, guys, so this is what I want you to do. If you're not sure why your tax rate recon doesn't balance, work through the information from the top. Identify what is included at the top. If I refer to the top, guys, it's this 1.6 million. What is included in this amount? And it's everything here. And then what is included in the 1.9 million? And then you will be able to get to your reconciling items.